Mr. Sikri, so basically, being a reader of the report, and I mean, we're very interested to hear some of your early insights on how do you perceive the outcomes and its impact on the region from a reader's point of view.
Maybe, thanks, thank you, Amy, for a great presentation. Let me start off maybe by two things. First of all, do you mind calling me Fred? Because when you call me Mr. Sikri, it makes me feel really old. So Fred would be great.
Trying to keep it formal, I'm moderator here.
With the tie.
Yeah.
And then the second thing I've noticed here, which is kind of surprising, is we're talking about the Sustainable Development Goals, but I seem to be the only one wearing the official lapel pin of the Sustainable Development Goals. So I'm going to hand you, each of you here, one of these.
Brilliant.
Right? So that we can rectify this error. There you go.
Thank you.
Voila. So I say that because a lot of people go around wondering what is this thing, right? This logo. And it's, as Richard was saying earlier, you know, that there's more and more people in the world that know about the Sustainable Development Goals, but we all have our little campaigning to continue doing. So yeah, Sustainable Development Goals, this report. You know, let me say I'm not an investment banker. I've never been an investment banker. I work in the private equity industry. I guess I've just developed this toxic habit of working with investment bankers. And as I've done so, I've actually realized that many of them, or more of them than that we think, have a soul. And more of them than we think actually think about doing the right things and the good things. It's not always hard. It's not always easy. It's always hard. In my experience here in this region, having been with the Abraj Group nearly since inception, we're the largest private equity firm investing in emerging markets. We call them growth markets, and we were started in the Middle East. And we're now, after 15 years of operation, the largest of our kind globally. And it shows to me that you can build sustainable, very successful, globally renowned companies from the Middle East and North Africa region. And we've not only done it for ourselves, but we've done it for quantum others, whether it be Maktoub, whether it be Karim, whether it be Aramex. These are all companies and brand names now that are globally known. Some of them have even been given the title of unicorn now. So we are seeing that in this region is fully capable of producing great, sustainable, long-term thinking companies that do the right things. But in order to be a great company, you first have to start by being a good company. And I think this is what this discussion is really all about. It's about getting rid of what needs to get rid of in our societies, in our governments, and in our private sector, in order to encourage the good companies and the real values of long-term thinking to take over. And if we have today, as a company ourselves, been extremely successful for our investors, and our track record proves that, we have gotten there because I'd like to think we've done the right things at the right time. We have been always undertaking the stakeholder engagement attitude and realizing and accepting that we can't be successful individually, and especially when it comes to the Middle East region, you can't be an island of success in a sea of turmoil. It's impossible. It's in our self-enlightened interest to make sure that we have societies where children are going to school, where women are allowed to work and get an education. Because at the end of the day, what does that do? That drives more consumption, and it drives more opportunity for whether you're selling services or whether you are trying to raise a family or build a business. So this whole discussion for me is really just about common sense at the end of the day. And it's about saying no to the wrong things. This is what the beauty of these Sustainable Development Goals and the advent of these goals provide, is they provide us with a framework for us as businesses to think about our business strategies. They offer us a framework, as Amy said, to tap into markets that don't exist yet, but that actually exist. And how does it make sense for us? We don't need to forego the hope or the strategy of making financial returns in order to be part of the Sustainable Development Goals. As these were being defined, as Richard also said, business was there. We were at the table as a company. And we said, at the time the UN, excuse me for saying this, but at the time the UN was saying, we need the private sector to finance the Sustainable Development Goals. That's where we were about 3 years ago. But that conversation has shifted now. We were saying to the UN, we will not finance the Sustainable Development Goals, but we will contribute to the Sustainable Development Goals if we can create sustainable business models within these 17 goals. And what does sustainability means? It means profit. And Richard mentioned that what used to be a horrible word as well. And I think we still have a little bit of work to do in that direction. There's some UN agencies still that put the private sector in a category, a grouping of people or actors called non-state actors. That's where business is. My 20-year-old son was telling me, I thought that's where they put terrorist groups in. And so there's still a bit of an evolution that needs to happen in terms of educating and conversing within the UN system that profit is not a bad word, and profit is an underlying necessity for profitability. And there's a lot of things that business needs to do as well. I mean, I can tell you one of the examples that we have is we're working with a big generator equipment producer in the healthcare industry. And I'll tell you a little bit more about that. But as we delved into the markets of sub-Saharan Africa with a vision of wanting to deliver low-income healthcare delivery systems to low-income segments of the population, the CEO of this big company was fully on board with us. But the people on the ground, his people on the ground, were still thinking their P&L at the end of the quarter, how many machines did they need to show that they had sold. Now, you've got to obviously make a business work. It has to function. You need your sales. But if you don't adapt creative, innovative ways of thinking about not just going to the big, expensive private hospital that may exist in Lagos or may exist in Nairobi, but thinking about how you can work with all the public hospitals that are catering to the millions of people that 70% of them are paying for their health care out of the pocket. There's a market there, but it just needs to be adapted and found and developed, and that means a different framework. And with time, the CEO's vision trickled down to the ground, and we're seeing progress there as well. So I think the point I'm trying to make is business also needs to evolve in its thinking. And if we don't, well, you know, Amy said we're doomed. I hope not. But we do have a very serious state of affairs, and I think we all feel it. I'm going to love to see how the history books talk about us and this whole era eventually. But if you look at these different, the sort of numbers that tell us of where we are, you know about the Richard Edelman Trust Barometer, right? So 37% of respondents judge CEOs as credible. So only 37% of the survey of the Edelman Trust Barometer trust CEOs as being credible. That's not good. The report here mentions that there's going to be 400 million people living in cities in the Middle East, North Africa region. Can we continue, to your point again, Richard, of just living as is and consuming as is and producing as is? Imagine 400 million people living in cities in this region. I mean, we have to do things differently. We have to think of the circular economy. We have to think of recycling. We have to think of clean energy, and so on and so forth. We don't have a choice. And then on the other side of this, you also have a number that stunned me. Yesterday I was reading this report. This number is 73 billion. You know what 73 billion is? 73 billion is the hours, 73 billion hours that women and children spend to access water. Now, just imagine if those 73 billion hours were used on education or on starting a small business. So this is the imbalance that we have and the dangers that we're facing, and at the same time, the massive opportunities that we have. I don't know if I have time to go on give the example, but...
We'll get you on the back on this.
There you go.
Ashraf, let me start your question to you with this interesting insight. The MENA region has a lot of differences. I mean, throughout the previous years of incident, it's very hard to really clump the MENA region into one unit because there is a lot of variance between different countries and different parts of the MENA. Yet lately, the one consistent question I've been getting the same answer on is, how is your lifestyle changing? And everybody around was saying this, from Saudi Arabia to Morocco to Egypt to Lebanon, everybody's talking about one thing: dire economic conditions and the need of changing the lifestyle with different parameters and different triggers. I mean, from your perception of a leading company handling face-to-face with consumers, how do you see consumer trends changing within the light of all of this?
Thank you, Hamad. So let me tell you some statistics first. If you have brushed your teeth, washed your face, treated your skin, applied a deo, drank a tea, had breakfast today, there is an 84% chance you've used one of our products. And this is exactly...
It's a good one.
Yeah, it is. Okay, this is exactly why we have a very, very, very small impact in everything we do, but multiplied by the number of consumers who use our products, this becomes big. And therefore, consumers to us are our life. I'm sorry for what I'm going to say, but it's a very, I'm going to use a very controversial thing. So I'm going to talk about, I'm going to represent business today. I'm not going to talk about doing the right thing. I'm not going to talk about the humanitarian part of the decision making. I'm just going to focus on a very robotic business representation. Consumer habits are changing, and they are changing, by the way, far faster than what anybody recognizes, for 3 reasons. Number one is economy. And if I talk about MENA region, we call it a region, but it's anything but a region. Yeah. From a consumer segmentation standpoint, we have the richest in the world and the poorest in the world in one region. So this is the consumer cluster we have to cater for when actually designing one product. So it's one company designing one product, but we want to cater for the highest GDP in the world and the lowest GDP in the world. That's on one hand. On a different note, we like to believe that there is a commonality of language, of religion, etc., etc. But when you talk about cultures, there are also too many cultures dominating the region. Now, the one common trait right now is economy. And economy is changing globally, and MENA is not an exception. So whether it's Saudi and Gulf, where economy has been a blessing for too many years, but everybody now realizes that this is also changing. Of course, changing has a different meaning in monetary terms, but it is changing. But if I talk about North Africa, then the story is very different. And Egypt actually is a very good example to talk about. Egypt is finally facing reality. So this is actually what's changing consumer habits. And consumer habits can change because of a belief or a need. And the need to change consumer habits following the economic conditions in Egypt and in the MENA region still applies, are becoming so big that it's inevitable. We measure something called share of wallet. So a household for us has a wallet, and this wallet will go to necessities first, and then it will go to must-haves and then like-to-haves. Just to give you a very a feeling about what has hit us in the last 12 months, consumers have lost 24% of their wallet value due to inflation, economy, etc., etc. But out of the 76 remaining, 62% have gone down to what we call there is disposable income, which is the part we all fight about, but then there's a part that goes to utilities, education, etc., etc. This part has also grown by 37%. So the disposable income, the money available for consumers to actually go and buy products, has shrunk by almost half. Now, this poses a huge challenge for companies like ourselves and anybody who's dealing with a consumer about how are you going to tailor your portfolio to make sure you have a product. Previously, you used to talk about the £1 product and the £5 product and £10 product. Now you need to talk about the £0.5 product and the £1 product and the £2 product. It's different, and believe me, it's very different. Now, we're not here to discuss business, we're here to discuss sustainability. But the beauty of it is Unilever globally, I think, has been a case study for how can sustainability be an integrated part of the business. And I think one of the big myths we need to I would say, tore apart is it's business versus sustainability. It's not versus, it's actually, again, numbers. In 2009, when we declared our sustainability strategy for 2020, our share price was 14 sterling pounds. 9 years down the line, our share price today is 44 sterling pounds. So it is working. Okay? If you know that, I'll give you one very small example. Plastic recycling. Today, the global economy is losing anything between $80 and $120 billion a year because of failure to recycle plastics. So does it make good business sense to actually recycle plastic? The answer is definitely yes. Does it make good business sense to change your packaging into something recyclable so you can claim back a part of the value? The answer is yes. And this is what we've been doing for 9 years now. The good news is, on a pure financial term, Unilever has saved around $700 million in the last 8 years by adopting sustainable sourcing or sustainable operation. That's on the internal part. The part I'm really proud of is how are we, I would say, impacting the society around us. Because by the end of the day, if we're focused on consumers and consumers affect our business results, then the more prosperous consumers become, the better business we'll have. It's a one-to-one relationship. And by enhancing consumers' life, we're actually long-term making sure that our business can continue to grow, can continue to make profit. So, and to me, that's the main difference between sustainability and CSR. CSR used to be the name of the game, but it was also a side activity. So it was something that you do in the afternoon or when you have extra money to donate. But gone are the days. Today, I'm not telling a secret, but the main driver of Unilever was one man, Paul Polman. So Paul Polman came into the company in 2008, and then he really turned everything about sustainability. Now, Polman has announced that he is about to leave the company by end of 2018. And the big question everybody has, would that mean anything to the sustainability agenda in Unilever? And I can tell you, even if we try to, we will not be able to, because it has become an integrated part of the way we do business. So it's not a side activity. I cannot actually roll back what we've done on sustainability today, and that's the most important part of it. Today, as we speak, we have touched the lives of 15 million students in Egypt over the last 8 years in health and well-being through Signal and Lifebuoy. It's a very simple thing. The importance of brushing your teeth, but if we know that the penetration of brushing in Egypt is below 50%, then this is very important from a health standpoint. Washing your hands, we use Lifebuoy soap. And between both, we have educated 15 million students over the last 8 years on why do you need to brush your teeth, why do you need to wash your hands. It's very important for the society, and long term, it means very good business for us. That's on the health front. If I move to the one thing that is very dear to my heart, which is inclusive society, as we speak today, we have 84 visually impaired people working for us. And I think this is something we in the company are all very proud of. And they are doing indirect and direct selling. And believe me, there is no reward better than sitting with these guys and get the feeling of the opportunity you've given them to change their lives. I can talk about lots of projects, but I don't think this is the right forum. But the message I want to give is very clear. Habits are changing mainly due to economic pressure. Unfortunately, not due to awareness. And the problem within the MENA region, I think we as businesses, as NGOs, as governments, have to take the awareness part. We have to up the game there because it's, I can again give you statistics. Globally, 33% of consumers make their purchase decision based on whether this is a sustainable product or not. 21% are at the tipping point. If you combine both together, that's 54% of purchasing decisions made based on sustainability decision. In the MENA region, that number is 17%. Only 3% are actually decided on whether to buy a product or not, if they know it's sustainable sourced or not, and 40% are tipping point. So the awareness part needs to be definitely improved. But then, other than awareness, I think the region here is also moving due to the fact that it's not an option anymore due to economy.
Okay, Ashras, is very insightful. I want to continue on one of the sentences you just said, that change is happening, unfortunately, not because of awareness, but because of economic condition. And Amy, I want to get back to you on this. One of the main findings that came out of this report, and I think every single Arab country is dealing with now, is youth. There is this huge youth bulge. For years, we have been talking about youth formulating a huge bulge, causing a massive pressure on employability. And currently, everybody is facing this all over the MENA region. This can become a bliss. It can become a curse. And it's a very volatile situation currently. I mean, we have seen the political situation that happened a few years ago because of this unused youth bulge. And the risk is still out there. So how do you see this in the light of the report coming up? And I know that Nigeria have a very similar situation too.
Absolutely. Thank you. So there's been a World Bank report that came out a couple of years ago now that shows across the world we have to create 600 million jobs. And most of those jobs need to be created in Africa and in global growth countries outside of Africa. So our regions are at the heart of where this job creation is needed. And 80% of those jobs are going to come from SMEs. They're going to come from private sector companies in our regions. So our companies need to adopt ways in which we can hire and educate youths as they currently are. So how can we have training programs that take youth as they are with all the limitations and the failings in education that they may come to us with? We've got to find ways of integrating as many of them into our business today as possible. But then we also have to support educational programs. And that can be in the form of pursuing opportunities in affordable education, which is highlighted. But it's also looking at how your business is interacting with educational institutions. And this is an area where we also have to talk to and lobby government. So what I'm saying is we've got to have two approaches. One is a very practical approach. So at Ladol, we take people as they are. We hire people who don't necessarily have the experience we need. In Nigeria, we have different levels of literacy across the country. There are other reports that have come out and shown that for a global growth country to become industrialized, you need 70% literacy rate. But that literacy rate will vary across the country. So in Lagos, we do have a high literacy rate, but across the country in Nigeria, we have high numerical literacy because we have over 100% mobile phone penetration. And you have similar situations in countries and cities in the MENA region. So we have to take people as they are, but we also have to focus on education as a business opportunity and education in lobbying, because getting those youths into work is going to be critical for our companies to be sustainable and to gain the $12 trillion prize that we've talked about, and the $637 billion prize we've talked about for the MENA region.
Fred, I want to get back to the point of Abraaj now is investing in the billions within areas of healthcare, climate change, and others. I mean, how do you see this happening? I mean, you have always been a very, might I say, bullish investment group. You have always started ahead of a lot of other investment funds. And now we've already taken leaps within the healthcare and climate change sectors. So tell me, I mean, how do you see this? How do you see renewable energy and what's happening with that?
Just quickly, I think on the youth bulge, Fadi Gandour, our good friend, says, we have to stop calling this the youth bulge. It sounds like a disease, right? It's quite the opposite. We have to look at it as an opportunity, as you said, right? So we should eradicate that word. Look, I think, you know, there's a group of enlightened CEOs. Paul Polman is one, Amy is one, our founder Arif Naqvi is one, and there's a growing group of enlightened CEOs who are, I guess they're enlightened. I mean, they want to run a great business and also do good on the ground at the same time. They've understood the greater importance that business is an integral part of society. It's not separate. And the advent of these Sustainable Development Goals has given, I think, even more ammunition to some of these people who were already doing different things and innovative things than in the past. But as I said before, the Sustainable Development Goals gave us a framework to think by. So, I mean, I think we're still pioneering as far as we're concerned in the group. We've been pioneers. We started the private equity industry in this region and in other emerging markets. We're learning as we go. And the story of the most recent success we've had with the advent of the Sustainable Development Goals was on the goal number 3, which is about ensuring healthcare and well-being for all. So one night, if you can try and picture this, Bill Gates was having dinner with Arif, our founder, and Arif looked at him and said, "Dear Bill, what you've done in malaria, TB, AIDS, is fantastic, but what's going to be killing people in developing countries around the world in the future is non-communicable diseases, diabetes, hypertension, cancer, all that stuff." And he said, you know, and your philanthropic approach is not going to work. Bill went, what? And that basically led to a discussion whereby philanthropy, Bill Gates' foundation, was used along with some of our own money to seed a fund that we wanted to raise to focus on South Asia and Sub-Saharan Africa, low-income segments of the population, to create the right delivery systems, healthcare delivery systems, so that they could access healthcare. In Lagos, do you know how many CAT labs there are in your city?
No, one.
Yeah, there's 2.
Okay.
There's 2 CAT labs. So if you have a heart issue, you need to have a stent put into your heart. I'm told by some of our guys that one of them doesn't work.
Okay.
So you end up having to either get on a plane, if you can afford it, or go without treatment, which is usually the case. So again, there is a massive need to address these non-communicable diseases in these markets. And we went around the world and we raised $1 billion. $1 billion for this platform. And we raised it by talking to wealth management platforms of big US banks who introduced us to high net worth individuals. And it showed to me that the consumer shift that you're talking about on the goods side, there's also a change on the consumer side in terms of those who allocate capital. Those who are allocating capital are more and more wanting to allocate that money to companies that are making a difference. They want to have a return on their investment, but they also want to show that they're doing good. And that is going to become even more prevalent as we move forward and as the millennials acquire between 9 to 24 trillion. I don't know how they make up these numbers, but some reports say 9, others say 24 trillion of inherited money that's about to go to the next generation. And these millennials think differently than us in terms of how they want to see that capital allocated. So right now, to make a longer story short, we have raised $1 billion. We're deploying that money in Nairobi, in Lagos, in other parts of sub-Saharan Africa and South Asia, where we're creating a platform. We're not buying 1 or 2 hospitals and going to grow them and then sell them off to somebody. We are creating a platform where clinical corridors, training that is coming in from Indian doctors into Africa, and creating new centers of expertise to deliver services for people who don't have access to these services. And in order to do that, we also did something that was also interesting. We brought in 2 companies into the fund. We brought in Philips and we brought in Medtronic. So in my view, it's the first time that a private equity firm, a foundation, corporates, and development agencies like the IFC came in together, blended finance, blended expertise, and we're working together to try and tackle this issue of low-income healthcare delivery systems in sub-Saharan Africa.
It's actually quite interesting.
Work in progress.
Yeah. We need to basically get you next year to see what's happening with this. So I think you've been hearing a lot since the morning, and I want to hear more from the floor. So everybody that have any question addressed to the panelists, please let us know. There's a question. Do we have a mic around? Can we get a mic here? Organizers, can we get the mic here, please? We need a mic here. It's coming.
Sorry for the delay.
Time build and anticipation, so we're waiting for the question.
Good morning. My name is Dora Fiani, and I've established and manage a foundation by the name of Knowledge Economy Foundation. We focus specifically on agribusiness, linking small farmers to their markets. I have met Mr. Bakri some time back on the subject, and using extensively ICT to replicate what have worked beautifully in a number of sub-Saharan African countries, and of course, the major model of India. I would like to make 2 points. One is that because of our activity, we're very much involved into research programs, and the focus is constantly on sub-Saharan Africa, as if North Africa is not part of Africa. And honestly, with all what's going on in the world, we have major issues in North Africa, and it's high time to look at Africa as a whole continent, not just south of Sahara. I'm not saying, and I raise my hat to the fantastic work being done in terms of development, and especially in the agribusiness sector with farmers in Africa, but honestly, with the issues of migration, with the issues of terrorism it's very important to also include North Africa in the programs and the plans, maybe raise the attention of Mr. Gates to this as well. And the other thing I would like to add in terms of sustainable development goals is the importance to, if the idea is to work bottom up, is to address those activities with a value chain strategy approach. Because at the end of the day, the challenge is not to just provide subsistence to the bottom of the pyramid, but to integrate the bottom of the pyramid in the value chains to which the different groups can relate to. Because that's how you build economies and sustainability.
Do you want to comment on this?
Just a small comment on the last point. I think you're right. Our decision and again, mentioning that it's work in progress, is our strategy is if we can cater to the low-income segments of the population, then we stand a better chance of being able to trickle down into the bottom of the pyramid. But if you want to raise capital and tell people we're going to invest in the bottom of the pyramid, it becomes a slightly different value proposition. Now, some impact funds are doing that. We're just placing ourselves at a different segment of the value chain. Now, one of the things, just to continue with our example, is I'm still not sure. We're doing screening programs in Nairobi, Lagos, and in Hyderabad. We're screening indiscriminately. And we are increasingly, what we're finding, the 20-23% prevalence of non-communicable disease to start with. What are we going to do with those who are at the bottom of the pyramid and who cannot afford treatment when we find them? This is a big issue that we're working on right now. Some countries do have government insurance, so we can refer them back to government hospitals. But I'm thinking that some philanthropic convergence into these for-profit exercises is going to be necessary too.
Let me just comment on that.
Please.
So in terms of the integration of North Africa, I think that's a great point. In Nigeria and in northern Nigeria, one of our emirs, Emir of Kano, actually just spoke about this. He was former central bank governor, and he made a great point, which is that when you talk about northern Nigeria or you talk about sub-Saharan Africa in high-income, low-growth countries, so the UK, France, the US, and they look at North Africa and they look at northern parts of Nigeria, they talk about unrest and how many troops they need to put in there. Whereas what we need to be talking about in terms of North Africans and those of us in sub-Saharan Africa is going back to the trade routes, going back to, the 300 years we had when we were all working together and we were trading and manufacturing and educating each other as one continent, and there was a strong connection between North Africa at the time and northern Nigeria in particular, but this focus on trade is not going to come from the outside. It needs to come from us, and it is one of the drivers of and one of the derivations of sustainable private sector business. The second point I'll make really quick is we've talked a lot about private sector, and I am a very, very big proponent of local private sector and working independently of government and sometimes in spite of government. But I have to say this is also an area when we talk about regional and continental integration where government regulation is really important. We see the troubles they're having in the EU, and that distracts us from the fact that the EU was actually very successful. So I think one of the other things we should also be looking at from a regulatory and government perspective is an AU, and strengthening the AU, and strengthening the AU particularly with respect to investment and looking at policies that allow us to move, like an electronic AU passport that allow us to move between countries, work between countries, invest within countries. So I support your point very strongly. It's a key part of sustainability that we have to look at regional and continental integration, and that's an area where the regulatory framework can help.
Perfect. I think we have time only for one last question, so if anybody have a burning question here, we can do it before we close. Can we get the mic here, please? Here. Oh.
Thank you for this very intriguing session. And I am, as a professor of marketing, I am a believer in sustainable development. And I think we need a very strong marketing campaign to teach people about this a very important concept. The issue is that we're talking about Egypt, as an example, 70% of the economy is with the private sector. Now, the private sector, we have formal and informal. And nobody have any statistics, real statistics, about how much each of these two sectors have. Now, the problem is, if you have the formal private sector can be educated and believe in the concept, we still have a huge sector who need to be educated about the sustainable development. And I think this mission, is it for the formal private sector to do it, for the government, for the NGOs, or is it part of the social responsibility of the corporations? So we have an issue that should be addressed to actually can achieve the sustainable development in developing countries. Thank you.
Ashraf, do you want to comment on this?
Yeah, so first of all, I fully agree with what you're saying. This is not only about sustainability, this is actually a far bigger problem. I think eventually what's happening in Egypt now in terms of legislation, that in the next 10 to, let's say, 12 years, I think the informal economy will have, in a way or another, to integrate. Because it's been a historical problem, and I know we're all suffering because of it, but we cannot start integrating the informal economy until we have the channels to do so. So there are lots of activities happening. Will it actually succeed or not is a question mark. However, the accessible part is still not done. So I would say, in terms of priority, this is the low-hanging fruit. Tapping upon the formal segment of the private sector is still a huge challenge. So let's do that first, while fully agreeing that by doing so, we need to be extremely aware that we're only tapping into 50% of the problem, not 100% of the problem. But then if there is a 50% that will require 3-4 years to go, then we do that while trying to attract more and more informal economy into the formal one so that it becomes more inclusive. But it is a bigger challenge, and not only in this specific problem, but it's a far wider one.
So some last words to finish with. Amy, I would love to thank you for this speech and for the Council's work on this report. The report will be available outside, copies for everyone if you want to take a look at it. It's a very interesting review of what's happening in the MENA within the economic changing times. Fred, Ashraf, thank you so much for this practical, insightful, and on-the-job, let's say, commentary of what's going around. I guess we can just close by one last comment. I mean, what we all agree on is change is happening. It's happening fast. We see it every day. That's probably the best horse we can bet on, and I hope that next year when we meet again, a lot of what we've been discussing would have been delivered by this pace of change. Thank you so much.